Warren Buffett and other well-known investors are often the first to come to mind when considering prominent investors. However, in the world of investment, someone else has made a name for themselves in recent years. When investing in disruptive technologies, Cathie Wood, the CEO and Chief Investment Officer of ARK Investment Management LLC, has created a name for herself as a stock picker and leader. After more than 40 years in the investment business, Cathie Wood became more widely known in 2020. With an annual return of about 150%, her ARK Innovation Fund launched her to notoriety she had never before known. The ARK Innovation Fund has generated an average annual return of 45% over the last 5 years. Hey guys, what's up? I am Fred, and welcome to Investing Wise Academy. In this video, let's get in-depth into what Cathie Wood has been into these past few months. Cathie Wood has been buying a lot of stock during the last few months. In fact, Cathie hasn't mentioned the stock at all. This indicates that Cathie Wood will be making additional purchases in the near future. As a result, she has no reason to bring up the stock. The stock in question is UiPath, a recent IPO mostly unnoticed by Wall Street analysts and investors alike. Even though the moniker UiPath may not be well known, ARK Invest is making significant investments in the company. UiPath is already ARK's 10th largest stock in total. From here on, it's only going to get bigger and better. Based on her purchases, it's clear that Cathie thinks UiPath has a ton of potential. She is continually searching for the next Facebook, Google, or Amazon. She stumbled onto the perfect solution just as luck would have it. Have you ever done a tedious and repetitive online task? If you have, the answer is probably a firm yes. It's easy to get bogged down in simple tasks that take a long time. This includes responding to emails, filing task returns, and preparing Excel files. UiPath, a top software business, is automating these tasks. For example, UiPath can assist an HR employee in organizing job applications and discovering prospective employment matches. UiPath's automation is awe-inspiring. With UiPath, you can say goodbye to tedious online activities. UiPath currently works with a wide range of data firms that can be automated for its customers' benefit. UiPath has been used by more than 8,500 enterprises across various industries. Companies with more than $1 billion in annual revenue make up the majority of UiPath users. Their clients include Toyota, BMW, JP Morgan, Verizon, Wells Fargo, Google, HP, and General Electric. So, what is UiPath, and why are so many organizations employing it? User-created automated programs can be built using UiPath, a customizable software platform. It is possible to distribute these automated applications throughout the organization, allowing all personnel to benefit from their utilization. Repetitive activities can be tedious, but UiPath has a solution using a task mining function that makes it easier. Tracking employee behavior and determining whether jobs can be automated is possible using UiPath. According to UiPath, productivity has dropped by half because of the billions of hours spent on online manual chores. Automating repetitive jobs is undoubtedly the future. Machines have supplanted humans in factories, which used to build items with their own hands. We're in the same scenario now. Robots are taking the place of humans in routine internet tasks. Robotic Process Automation, or RPA, is a rapidly expanding market. The RPA market is predicted to triple during the next 4 years. The RPA market is expected to increase at a compound annual growth rate of 32.8% between 2021 and 2028. That growth rate is absolutely incredible. A compounded annual growth rate of 79% has driven UiPath's recurring revenue to $653 million in the first quarter of 2022. UiPath's established and extended business strategy is driving this expansion. First, UiPath secures a customer for single-task automation. As soon as customers realize the potential of UiPath's services, they begin increasing their relationship with the software company. To give you an idea of how effective this strategy has been, one major automaker has boosted its UiPath investment 4 times since the fiscal year 2019 began. UiRoot generates a steady revenue stream for the company because each set of customers spends more and more money. In fact, UiPath was the second fastest growing American firm in 2020 after Expedia. UiPath's go-to-market strategy is another reason the company is developing quickly. A company's go-to-market strategy is to contact potential customers directly by email, phone, or any other means. As previously stated, each new customer typically begins with a single automated use case. As a result, UiPath's services grew in scope, culminating in complete adoption. The income generated by UiPath's customers isn't reflected immediately because they're increasing their expenditure. Nothing is surprising about the fact that UI isn't yet profitable. It has been a long time since UiPath's non-AP operating margin and non-GAAP free cash flow margin have been positive. Investing in the company's future is a priority for the corporation, with new workers and acquisitions a part of the strategy. UiPath has a gross margin of 85%, which is extraordinarily high, even though it is not yet profitable. The profit margin will continue to rise as UiPath's yearly recurring revenue continues to climb. One of the most critical questions is left unanswered by this all. What is the state of the market? Today, UiPath is the market leader in robotic processes and automation. UiPath has a 27.1% lead in the RPA market, according to an international data company. Blue Prism and its closest competitor, Automation, hold 19.4% of the market. When it comes to software as a service, it's frequently a case of winner takes it all. The other services would necessitate learning an entirely new set of code on a new platform. UiPath has risen to the top of the heap because of its flexible, large, and simple platform. UiPath's sales climbed by more than 64% year over year in the most recent quarter, outpacing the growth of its competitors. Blue Prism, on the other hand, only increased by 32%, and Pegasystems only grew by 18% respectively. As a direct result, UiPath is gaining market share. UiPath ranked number 1 in all 3 RPA categories, including strategy and market presence, according to the Forrester Wave, a leading software research group. To top it all off, UiPath has a 5-star rating, the highest among all its rivals. As a result, customers are happy with UiPath. Daniel Dines, UiPath's founder and CEO, is once again the best in the business when it comes to leadership. As a Microsoft software developer, Dines launched UiPath in 2005, and the company has snowballed. Daniel Dines' primary objective is to develop UiPath's capital through strategic investments, providing long-term wealth for himself and all UiPath shareholders is in his self-interest, as he owns 7 billion shares. When it comes to company management, we can see his long-term focus through his investments in R&D, new people, and new products. Following our review of the company's operations, it's time to move on to the meat and potatoes of UiPath's stock study, the process of determining a value. Because of UiPath's rapid expansion, its stock is trading at a significant premium to its fair value at the time of this video's production. This is a high sales ratio for UiPath, which is now trading for $21.92. Unusually for a company at this stage of development, UiPath enjoys a healthy cash flow. As of October 21, UiPath has a $1.9 billion in cash with no debt. UiPath doesn't need to raise money for a while now because of this. The company's debt-to-equity ratio is at 0.02, which means it has plenty of cash to make acquisitions. Over the next 5.5 years, UiPath's stock is expected to appreciate at a pace of 10% per year. If you desire a yearly return of 10%, UiPath is currently undervalued by about 5%. Many investors hope to get an annualized return of 20% on their assets. UiPath must fall to $15 per share for that to happen. According to ARK Invest trading history, the company is still optimistic about UiPath even at its current pricing. So, what do you think of UiPath? Will it remain at the top of the industry in years to come? Or is Cathie Wood and ARK Invest wrong? Share your thoughts in the comment section below. Thank you so much for watching. If you're new to this channel, make sure to subscribe and hit the notification bell button to get updated on our latest videos. Again, this is Fred. And don't forget to like this video and see you next time.